slight pullback, as I mentioned earlier, coming through on the NSE in yesterday's session. And like I was saying here in South Africa, where you've got the markets continuing to surge ahead and the bull run having run for most of this year, not surprising that we're starting to see some players come in and wanting to book profits.
Actually, what's happening now, especially this week, is just an indication of what's going to come in terms of key players, taking hold positions, because most of the marginal profits that they could have made have already been taken. Key strategic, stocks have already been, grabbed up. So people are just waiting to see the way forward, especially to see how the key fundamentals of these key stocks will be behaving in regard to the political situation at home, and also to see how whether the government will actually continue implementing key, fiscal policies. But the interesting thing is the market has actually largely been driven by foreign investment participation, and this has actually reduced significantly with key stocks like Safaricom, Equity, EABL, BAT actually showing a slight participation from them. And we're seeing that local investors, most of them who are actually selling out, are now actually trying to get back in. So you're trying to see an imbalance in terms of performance, in terms of trade investment, but the bullish aspect the market had has actually slowed down, and this week is actually the beginning of how the market is going to be as we get into the new year, and as we wait to see how how politics is actually going to play out.
Very interesting time then, Steve, for Umeme to be listing on the NSE. Of course, this is the first non-Kenyan company to be listing on the Kenyan bourse. What do you make of the company's move? Of course, it is a company that's already listed on the Ugandan Stock Exchange, and now pursuing this move today.
This is a significant move, especially in terms of trying to ensure that the East African countries have a mutual stock market. We've seen that Kenyan firms have been able to list across the other stock exchanges in Uganda and Tanzania. For Umeme, this is significant. There's huge appetite in terms of investment. We've seen that any instrument that has actually been afforded and listed at the market has been snapped up. So this is good for foreign investors who've been looking for good companies to invest in with key strategic fundamentals, and Umeme has key strategic fundamentals. Energy is key. I mean, it's more or less like a monopoly. So whichever you look at it, the profits are guaranteed. Management is top. Key strategy in terms of going forward, we're seeing that East African countries are actually looking at stabilizing the energy sector. So this is good. This is good. It's good news for local investors who are looking for a piece of the cake in terms of investing in the region, and also it opens up doors for other firms that are listed on the Tanzanian and the Ugandan Stock Exchange but are not listed here, to see how the performance of this will be key on how the other companies will actually come on board. But also it will bring in a different management style to see how a listed firm from Uganda performs on the market, and how the Kenyan markets can actually also be able to improve their performance here.
You've in part answered my next question, Steve, because you highlighted how for Umeme this is significant, how it's significant for investors as well. What kind of significance do you see this having for the NSE in terms of, as you alluded to, this acting as a catalyst for other African companies to list on the NSE? You've said that you see it as acting as a bit of a catalyst. What kind of interest has been shown from other companies out there?
We've seen that a lot of Kenyan firms have been able to list across Tanzania and Uganda, but we've never seen another company from the region actually listing on ours. So this is significant in the sense that companies in Tanzania, because we know Tanzanians are very stringent in terms of how they invest in other countries. We've seen Rwanda actually coming up. So they have a lot of we have a lot of, like, for example, in Rwanda, the banking industry will actually benefit a lot in terms of cross-listing on the Nairobi Stock Exchange, and also Uganda. So the performance of Umeme will actually highlight, one, how the aspect of management will be, the issue of policy guidelines and the legal framework, how the terms and conditions of these firms will actually be needed, and whether in terms of capital boost for them, whether listing on the NSE will actually be a plus for them. So this is important, and also not to forget that for a while the East African countries have actually been trying to get the demutualization and a joint East African Securities Exchange. So this is important because it shows that our Kenyan market, and actually people have faith in it. It's actually maturing, and we'll forget the issues of the legal and the political policy issues that actually been, a hindrance in terms of cross-listing. So this leads to breaking down one of the key barriers.
Well, Umeme, just one of the companies operating in the region's energy space, Kenyan Cobalt another, and Kenyan Cobalt the biggest loser on the NSE in yesterday's session, Steve. We had shares falling 9%, and that on the fear that we've seen a breakdown in talks and negotiations between itself and Puma Energy. Just how much detail do you have on that? Because the companies have certainly not been forthcoming with where exactly they're sitting in terms of those negotiations right now.
We actually knew that the stocks were actually headed for a deadlock because the government that is actually relevant in terms of energy was not apparently consulted in terms of the buyout by Puma Energy. And then also we did see that most of the employees who've been sacked actually decided to go to court to seek better terms in terms of being brought back to work. So we've seen the performance of Kenyan Cobalt. Actually, it's been going down. We've seen it ceding its market share control to Total, and this is one of the key fundamentals that were actually central to its buyout by Puma. So we've seen that the buyout is actually unlikely to take place given the fact that the Kenya Airways ruling that actually, the High Court ruling that actually ordered Kenya Airways to take back the 400 workers is actually might have a negative impact on the performance of Kenyan Cobalt, because now the sacked employees of Kenyan Cobalt are taking this ruling as a precedent to go to court, amend their pleadings to court and pray for the court to actually order Kenyan Cobalt to take them back also. Yeah. So you're trying to see that the labor dispute in our labor market is actually going to take another turning as the Kenya Airways ruling takes effect, and this will ultimately impact the negotiations between Puma and Kenyan Cobalt, and not to mention that the Ministry of Energy and the other relevant stakeholders actually, they keep saying that a lot of information has been hidden from them in terms of how the minority shareholders are going to be handled, how the transition in terms of employees is going to be done. So this has led to the breakdown of talks, and this has impacted negatively the performance of it on the stock market, because we've seen that 2 months ago, Kenyan Cobalt risen to its highest ever in 2 years. Yeah. And now we've seen that it's actually dropped significantly. So by close of today, I'm thinking another drop in probably 3 to 4% will have occurred.
Well, we're certainly all too aware sitting here in South Africa of how labor conflict situations can have an impact on foreign investor sentiment into any country. So that an interesting story that we'll have to be keeping an eye on in terms of its development. Of course, when you've got foreign investors looking at territories, companies in a negative way, and that having an impact on FDI into a specific country, Steve, it has implications for the growth scenario, and we've got growth inextricably intertwined with the performance, or the banking sector's growth rather, inextricably intertwined with the GDP performance of any country. Let's take a look at the Kenyan banking scene right now, because Citi, adding to the rhetoric that we've been hearing over the past couple of weeks, that a drop in Kenyan banks' total profit is set to hit the market scene come 2013.
That's very true. Most banks have actually reached what you call a plateau in terms of profit growth, and in terms of being able to come up with new products to actually target in new clientele. In as much as central bank is saying that there's over 400 billion of money from the Kenyan population that's actually unbanked, that's going through the system. We've seen that with the drop in interest rates by the central bank, we've seen more significant banks actually dropping the interest rates as come January. So this will actually greatly impact the profit margin growth significantly by at least 21%. Secondly, we've seen that lack of new innovative products in the market. We've seen that most of the innovation in the financial industry is actually being pioneered by the mobile providers. Mm-hmm. We're seeing Safaricom coming up with new products. We're seeing Airtel coming up with new products, and the target group is actually the unbanked. And this is a group that the banking sector should actually be targeting, but they have know-how. The only bank that actually been managed to do this, Equity, has reached its actually maximum plateau. There've been analyst report from City Research actually indicating that Equity should actually stop expansion into other regions to actually focus on consolidating its Kenyan operations. So this and the fact that its target market has actually been maxed out is a clear indication that banks need to come up with a new strategy to be able to target. We're also seeing there's going to be a significant drop in terms of loan uptake, because as we get into elections, many Kenyans want to know, before I take a loan for investment or before I take a loan for any project, I need to know how the country is going to go. I need to know where my investments are going to be. So we're going to see that many people are actually going to look at how the relationship with the banking industry is actually going to change for the next quarter until significantly we are through the election. But also, as long as the central bank will continue dropping the interest rates, this will continue actually dropping the profit margin. And we've seen the aspect of the mortgage, we've seen the aspect of loan repayment portfolio. Equity Bank has an issue with its loan portfolio, and I think this is significant with other banks, though information is not coming out. Also, there's a report that came out and said that many banks, especially the big six, have been able to inflate their margins and their profit returns. So there's going to be significant correction as we get into the new year.
Well, it certainly paves the way for an interesting road ahead. Steve, let's leave it there. Thanks so much for having joined us this morning. Steve Biko is a director at the Hidalgo Group.